Everybody okay?
All right, thank you.
Thanks, Josh.
Josh, always.
3:31.
Well, I think everyone's here, so we will call the meeting to order.
Should we close that door?
Yeah.
And first order of business, how about silence? I'm in. The only thing that I see, we need to approve the agenda. One thing that I see is missing is the approval of the minutes of the last meeting. So if we could modify the agenda, and do I hear a motion that we approve the minutes of the last meeting?
Well, I'd like to add another item, a discussion, and that is discussion of the bylaws and this committee's status.
Good. We're going to fall under new business.
So I move the amended agenda adoption to include approval of the minutes of last year's meeting, as well as another item of discussion of bylaws and committee status.
I'll happily second that.
All in favor?
All right.
It's approved. Do I hear a motion that we approve the minutes of the last meeting?
So moved.
It's been moved. Is there a second?
Second.
All in favor?
Aye.
Good. Before we get into Livonia, do we want to talk about the bylaws and before or after?
She's waiting.
Yeah,
She's waiting, all right.
in the clock's up.
Livonia, we'll have our discussion of the audited financial statements ending June 30, 2025. So I'll turn the meeting over to you.
Okay, perfect. So I really appreciate you guys letting me remote in today. With Fran being out this week, I'm trying to figure out how to be in two places at once, and this is the only way that I'm able to do so. I haven't figured that out yet, so I do appreciate it. I sent the invitation also to Melissa, so I've got Melissa online. She directly worked on the audit, so if there are any specific questions, I wanted to have her available, so she is also present. And if the host of the meeting could give me sharing capabilities, I need to share my screen.
Hold, please.
He's working on it.
Maybe she can't hear us.
Let's see, I can send a request. Maybe that'll help.
You can't hear us, can't you, Livonia?
Oh, yes, I can. You guys can hear me okay?
Yeah.
Okay, perfect. So I have sharing capabilities. So I am going to share my screen. Okay, can you guys see the logo?
Yes.
Okay, perfect. So what I was going to do is I just prepared a few slides. I feel like we did this in a little bit different order than we normally did. We would normally do this before we showed up at the commissioners meeting, but we're doing this in a little bit different order. So what I wanted to do is just kind of go over a few slides. What we're going to cover is client service team process, summary of audit results, talk a little bit about internal control communications, corrected and uncorrected misstatements, some other required communications. I'm going to hit the financial statement highlights. I am not going to talk about every single page on the financials, so I know that's a huge disappointment, but and then some other items. I figured you wanted me to be short and sweet, so I'm working on the I can do the short. My family tells me I still need some work on the sweet, but so client service team. So Fran was the engagement director on your audit. Addison, Melissa worked on it, as well as Rachel. I was not part of the engagement team this year, so really my job is to present this to you and answer any questions that you have. Let's see. Audit process. So really, this is kind of what our audit process looks like. Planning, that's kind of what happens before we show up. Execute, that's when we wreak havoc in your schedule. So that's when we show up, we're asking all the questions, having you pull all the information. Reporting, that's when we gather it all together, draft the reports, and make sure we have everything we need. Communicate, last step. That's where we're sitting right now. So the summary of auditors results. So the financial statements are as of June 30, 25. So we are now more than 6 months into your next fiscal year. So just keep that in mind that we're talking about June 30, 25. The financial statements include the annual comprehensive financial report, ACFR. It's a lot easier to say. So you are one of the few governments that we work with that present the full ACFR. Included is the required supplementary information, and other information are all included with the financial statement. So different sections there. We issued an unmodified opinion, so that is the clean opinion. That's what you want to hear, and you could probably just kick Melissa and I right out of the meeting. But we cover the governmental activities, business type activities, major funds, and the remaining fund information. So all of that is kind of bottled up into what's included in the opinion. So, but I mentioned up here all the different items that are included. So the required supplementary information. That's your management discussion and analysis. That's your ledgers, the local government employees, pension information, and the LEOSA, the law enforcement officer special separation allowance pension information. That's limited procedures that we apply to those because most of that information comes from an independent valuation or from the state of North Carolina's information. So we provide no opinion on the required supplementary information. That is every single audit in the state of North Carolina. So that's not just how we do things, that's how it's done across the board. The supplementary information is your individual fund statements, the budgetary schedules, and then also the other tax information, the receivable schedule, and the levy information. And that is included in our audit opinion. And then the other, I'm sorry, was there a question?
Go ahead and finish, and then I have a question for you.
Oh, okay. And then the other information is management's responsibility. So that's the pieces that make it the ACFR, and that's the introductory section and the statistical section.
My question, Livonia, is in your second bullet there, you said we're one of the few clients that do a complete ACFR. Why don't all of your clients do a complete? Or another way of asking that is, why do we do a complete and everybody else doesn't?
I can't speak for all of our other governments and why they don't do one, but if I had to throw a dart, it would be all the additional information in those back schedules that you have to pull together. They just don't want to do the work. Melissa, do you have, I'm throwing a dart here and saying, I know it's a lot of information to gather. Melissa, do you have any information why nobody else does the ACFR?
I do not, but I agree. I think that would probably be the reason why.
Livonia, does it have anything to do with the fact that we're getting federal funding?
No. So that we have other governments that are subject to federal single audit, that are subject to state single audit, which is additional reporting requirements above and beyond what you have in your statements, and they don't do an ACFR either. So it is a personal preference. It is not required for the state of North Carolina. So I think when we picked up Montreat, you guys already were doing one and just continue to do one. So it is a preference, not a requirement.
Something we don't need to.
Hey,
I think it's
Livonia,
great that we do.
Yes.
I had heard from somebody else, another finance officer, that had said that it, like you said, it wasn't required, but once you start that you have to continue. Is that true?
I do not know the answer to that question,
Okay.
but I can find out for you if I can find my pen on my desk somewhere.
So Philip, you're saying you think it's a good idea?
Oh,
I mean, and I don't mind. I'm not afraid of the work, obviously.
And that's, it does provide additional information, and honestly, I think it sets you apart. It's like, hey, we do the full ACFR. And so if it's not a huge burden, which I guess that's subjective, right? So you already have all of that historical data. So you're kind of just pulling 1 year at a time versus another government having to pull all of the information. So if it's not a huge burden, it definitely sets you apart in a positive way.
Yeah, that's good.
Thank you.
But I will find out the answer to that question, that if you decided next year, hey, we don't really want to do this, could you just go back to being a regular audit? I will find out.
Okay. I was just curious because somebody had told me that and I wasn't sure. I was like, well, we do it. It doesn't matter. But they said, well, once you start, you have to continue.
Okay.
It's required or something.
Melissa,
So.
do you have any idea?
I do not.
Okay. All right. I'll find out. I'll get an answer for you. Some additional information still along the lines for the summary of auditors' results. Audit was performed in accordance with generally accepted auditing standards, so that's GAS, and government auditing standards, also GAS, different GAAS, but government auditing standards because of the federal and state funding. For compliance with state monies, tested. I did this. I had a board meeting on Monday and I couldn't make a complete sentence, so it has nothing to do with the day of the week, I guess. Tested compliance with the cash flow loans for disaster response, and then the Hurricane Helene emergency bridge loan. Compliance findings related to pre-audit certification, fidelity bond, and contractor work authorization were noted and reported in the report, in the financial statements. There were no internal control deficiencies related to the financial statements that were required to be reported. And I did get the information that you sent over on the FPIC, and I'm going to find out. I did not ask Melissa yet. But I will find out how that needs to be submitted.
Okay, thank you.
So we talked a little bit about internal controls. So in order for those to required to be reported, they would fall under the classification of a material weakness, which could cause a material misstatement of the financial statements. It doesn't necessarily mean it did cause, but if it did cause, it's kind of a slam dunk. But if it could cause, it would fall into that category. Or a significant deficiency it's less severe, but we want to call it to your attention. But again, none of those were reported related to the financial statements.
Yeah, the statement did say that the findings that you did report were not a material deficiency.
That is correct. That is correct. They were not labeled into those significant deficiencies or material weakness bucket because they were directly related to compliance.
Okay.
Corrected and uncorrected misstatements. So on the letter to those charged with governance, we are required to disclose any financial statements any journal entries that we corrected or any uncorrected misstatements. So corrected misstatements decrease net position about $220,000. I do have the financial statements and the letter open on my computer if we wanted to look at that. But what I wanted to say about this is your internal financial statements are prepared on the modified accrual basis of accounting. We convert those to full GAAP basis. So generally speaking, as compared to most of our audit clients, local governments have more journal entries, and the nature of those journal entries tend to be higher dollar amounts because of those conversion entries. Just for instance, if you're thinking about capitalizing fixed assets, internally, you put those into expense, and then the audit comes along, we have to move those and capitalize. So it increases your net position. So when you're looking at financial statements for local governments and you're looking at the number of journal entries and the dollar amount of those journal entries, you typically see a lot more journal entries with the local government than you would just a historical nonprofit or for-profit entity. Uncorrected misstatements, so that's, hey, we know this is different from the trial balance, the supporting, it was only about $1,300, and so nothing that you need to be too concerned about. Other required communications, so we had no difficulties in getting the information and performing the audit. We also had no disagreements with management and over accounting principles or auditing matters that we would bring to your attention. So financial statement highlights. So key 2025 events, Hurricane Helene and recovery efforts. I think that really is the main driver on your financial statements. For comparability purposes, North Carolina cash flow and bridge loans, and new accounting pronouncement for compensated absences. So FASB 101 was required to be adopted during fiscal year 2025. And if you remember several years, and it's probably been about 5 years, it could have been 7, time kind of gets away from me, but we had those years where GASBs were introduced with the pensions, with the ledgers, with the LEOSAs, all of those pension related debt that got put onto the books. So now here's a new one for compensated absences. The prior period adjustment that was required was about $50,000. So it had to be recorded as of the beginning of the year. And so those compensated absences were put on to the tune of about, I believe it's $48-ish thousand, so about $50,000. Financial statement impacts, net position of about 8.9 million as of the end of the year. That was a decrease of almost 200,000. The breakdown of that was 156,000 loss for the governmental activities, 38,000 for business type activities. Your capital assets decreased over 230,000. So you had some additions, you had some disposals, some depreciation, but the net effect of all of that really was a decrease in capital assets.
And a backhoe that broke.
Yes. The liabilities increased about 350,000. So increase in installment notes, increase in pension liabilities, and then also compensated absences. Kind of the breakdown for that was you had about $150,000 in principal repayments, but those increases for the notes, again, some of that being the cash flow and the bridge loans, the pensions, and then compensated absences was an increase of about 540,000.
Well, I have a question.
Okay.
Depreciation normally is for ordinary use of equipment and the infrastructure. The hurricane depreciated us far beyond normal depreciation. Does that have to be represented or addressed in any kind of way?
It is. I'm switching screens. Can you guys see what I'm pulling up here?
Yes, we can.
Okay, good. Sorry, I don't want to make anybody dizzy, but I'm going to get to the capital assets note. Okay, so here's the capital assets. Here's where you're going to see this. So here's your regular additions.
Yes.
And so the disposals here. So this is the removals. Melissa, please chime in if I'm telling you anything different. So the disposals are coming off. So here's where you're having the accumulated, the decreases here, things that are coming off. So those hurricane related items are coming off as the new ones are being put on.
Wait, say that in other words.
Or is a journal entry, is it a charge off? Or
Yes.
a charge down of the capital?
Yes, it would be increases here, and so you have to look at this and I realize this is probably coming up on your screen really small, so let me make it a little bigger here. So here's capital assets being depreciated. Here's some removals of those.
So that's your charge down. That's what.
Yes, so that's what's coming off, and so it's coming off both the governmental activities and then the business type activities. So we're taking those off. And then as the new ones go on, those will be added on at the estimated useful life. So net property and equipment 5.8 million-ish. Again, I remind you, property and equipment is net, is at cost, net of accumulated depreciation, and in no way mimics fair value.
I understand that, but so did you increase the depreciation because of the hurricane?
No, just new equipment.
So it wouldn't be depreciation expense. So what would happen is you would remove those assets. So if an asset is destroyed, you would remove it. You wouldn't fully depreciate it. So fully
okay.
depreciating it would be you're using it up versus, hey, this asset is destroyed. We're taking it off the books.
And how did you know what that figure should be?
That's a good question.
So when it comes off the books, it would be at what it was originally
on the books.
recorded as the cost less accumulated depreciation.
So, did you, Rachel, provide them with information about, under equipment, what was destroyed as well as
Yes.
what was
Yes.
broken down?
Yes.
I got you.
Okay. Okay, good, thank you.
Yes. Okay. I'm going to flip back over here. Okay. Let's see. Okay. So continued financial statement impact. So we've got total revenues increased almost 400,000. So you had a $300,000 increase in operating grants and contributions. Most of that directly related to Hurricane Helene. Total expenses increased about 1.1 million. Again, Helene expenses. Total salaries increased approximately 14%, so about 115,000 increase in salaries. That was other than Helene. That's where you saw some major increases. Major funds. So each year we have to determine what major funds are that get reported. So if you remember in one of the first slides, we covered the major funds under our opinion. So general fund and the Helene Recovery Fund. The general fund will always be a major fund. So it is your main operating fund. It will always be a major fund. Unassigned fund balance in the general fund was about 2.1 million, and that's 75% of the total fund balance in the general fund is unassigned. So that means it's available. The general fund had a positive budget variance of about 725,000 for the year. Your water fund revenues had 387,000. Operating expenses were about 422,000. Almost $75,000 of that was depreciation. So when your operating expenses include depreciation, so that's not a cash expense. So I always want to say, hey, operating expenses, but that does include. And this is the operating net loss of 38,000. And there were. I'm sorry, what was that?
I said, but we had a positive cash flow.
Yes, but and that was the next thing is positive cash flow in the water fund, 110,000, and that's why sometimes those non-cash expenses, when you're looking at it just from a math standpoint, it doesn't make sense. So you actually had positive cash flows of about 110,000 in the water fund.
Why is that?
Depreciation.
Mostly depreciation. Let's see.
That's okay.
But no money's
That's
also
right.
being put in a
okay.
reserve for replacement either.
No, depreciation is a non-cash expense.
I know, but we're not, we also are not.
We have problems in that.
Reserves too.
Yeah.
Some other items just that I wanted to mention. So the financial performance indicators of concern, the FPICs, information you guys have already signed off on. I have a copy of the letter. Operating net income for the water fund less than 0. Water fund capital asset condition ratio less than 50%. The statutory violation, so that was the pre-audit certification as well as the contractor authorization and then the bonding, and you guys have responded to those and that will get submitted. The audit has been submitted, but it is awaiting approval by the local government commission. So the reason you don't have your final financial statements is the process we do is we upload everything to the LGC. We wait on their approval, then we print the finals, just in case they come back and say, hey, what's this? What, or have some recommendations. So we are waiting on final approval, and Melissa checked the status right before this meeting, just so I could make sure I gave you the most hot off the press, up-to-date information, and it is still sitting as submitted.
So Livonia, when you say awaiting approval, you mean from the LGC, not from our own council?
The commission.
That is correct,
No,
from the
it's the
LGC. Yes, so everybody has signed off on everything. You guys signed off on it. We signed off on it. We have submitted it to the LGC, and they are doing their review. And then they will send an email when it has been approved.
The commission,
The commission has not approved it, though,
The town council.
the town council.
Did that not happen? Oh, I'm sorry. I thought
When
that
Fran
happened at
was
the
here.
board meeting
What's
that
that?
Fran came
I thought
to.
when Fran was here.
it's gonna happen tomorrow morning, hopefully.
Okay, I'm sorry. I thought that when I said we were kind of doing this in the wrong way, I was thinking that.
I don't know.
I think it has been.
I think we
Okay.
authorized you to go ahead and send it in
Because of the December 31st deadline.
because of the deadline, but it hadn't gone to our commission yet.
Yeah.
Okay.
But I did approve the proof.
Okay, so
Yes.
everything has been sent in, and it is still awaiting the LGC's approval.
Right.
The threshold for some government audit requirements, so we talked about it being subject to government auditing standards. Some of the thresholds are changing in fiscal year 26 based on federal dollars, state dollars. So some of those requirements are changing. As far as the dollar threshold, some are increasing. I was trying to get a table together for the actual changes, and I wasn't able to pull all of that together before the meeting. But the federal requirement's increasing to $1 million. Just the state requirement is increasing to $1 million. And I am trying to find clarification on exactly what the yellow book, which is what you were subject to, how North Carolina is changing that in regards to the reporting threshold. And then I just wanted to throw out there, so for fiscal year 26, GASB 103 will be required to be adopted. Financial reporting model improvements. Anytime I see the LGC release something that's called improvements, I wonder if it's really an improvement or what exactly that means. But they are saying it's new accounting and financial reporting requirements related to MD&A, unusual or infrequent items, proprietary fund statements, major component units, budgetary comparisons, and financial trends in the statistical section. So that would affect you with the ACFR. And so we're still waiting on information. The LGC has been historically slow in releasing some of that information. So as soon as we have our hands on something, we will be sure to pass that along. But just wanted to let you know that is out there. The last slide I had is just contact information for Fran, me, Melissa. I know you. Yes.
Can you restart your screen sharing?
Can I what? I'm sorry.
Can you restart your screen sharing? We're looking
Oh, are
at
you?
letterhead from Carter.
Oh,
Yeah.
well, that's really weird. Oh, why did it? Are you not seeing my screen?
We're seeing
We're
the
seeing it.
letter.
It might be on a different app as well.
Oh, shoot. All right, let me try. I'm sorry.
Oh, good. There we go.
Oh, I'm sorry. So did you? What did you miss? Just this?
Yeah.
Yep.
Okay. Sorry. I don't know what happened. I didn't. So contact information, Fran, myself, also
Yes.
Melissa. So I'm going to stop sharing for just a minute, and then so I can see everyone again. And then I still have everything on my computer. So if you have any questions, I can pull anything up on the financials or the letter or back to the slides if you have any question.
I can, are there any questions for Livonia?
Yeah, a couple. On page 31, you do a great job summarizing definitions of fund balances, different types of fund balances. but I still find it confusing. We have a lot of folks who, can you still hear? Yeah.
Yes, I can. I'm pulling up the statements. You said on page 31?
It is, there you go. That's it, the summary of the types of fund balances. The unassigned, the assigned, the available. You talk about a remaining fund balance, which is in that third paragraph there, which is the first time we had seen that term, or fourth paragraph. When we get asked by residents, well, how did we do versus last year? For those of us who aren't accounting or forensic accountants, how do we answer them?
Let's see. So I don't think the MD&A shows that much detail. I mean, I guess in this particular, I have moved to page 9. So this is in the MD&A. So governmental financial statements are not full comparative when you're looking at most financial statements out there in accordance with GAAP. So here, I think what you could do is you could look and see compared to, for net position, your restricted versus unrestricted. So this is doing total net position. It doesn't break it down by fund. And so I would say, looking at this, your restricted net position decreased and your unrestricted net position increased. So what that would tell you is you have more unrestricted dollars available for use should you need those funds. And so in that respect, I would say compared to last year, you have more unrestricted dollars available to the town.
Good.
And the investment in capital assets decrease. So your investment in capital assets is gross asset, is net capital assets less any related debt. So your net investment in capital assets decreased, as we would expect based on what we talked about, the loss of some assets, you're building back some of that infrastructure, the annual depreciation. So all of those things, I would have expected the net investment in capital assets to decrease.
And that would also include loans that we took out?
Yes, it would.
Less loans?
Yes.
Gotcha, thank you.
I'll leave this open in case you have the questions, any other questions on the statements.
I do have another question, and let's see, on page 46, and this may be more for Rachel, the installment purchases, 6A, the third installment purchase in August 24, before Helene, the town entered into a note with a private banking institution for $100,000 to finance repairs on the Texas pedestrian bridge. Who was that paid to? Is that
First
Jess?
Bank.
No, that's who it's from.
Oh.
What was that for?
So that actually it was moved all to Fund 29. It was all moved to Helene.
Okay, so that's what we had taken out for Jess.
Yes.
And some of that other prep work. And we used that money for Helene.
Yep.
Gotcha.
Yep.
Okay. Gotcha. On page 47, we'd also,
When you say page 47, you mean the packet, page 47, correct?
the audit, page 47.
Audit page. In this?
Okay.
So it would be this dark number down at the bottom,
Okay,
not the red one.
I got it.
The town entered into a note for emergency repairs in the water infrastructure. We made those corrections. We got reimbursed by FEMA, but it was in this current fiscal year.
Correct.
We still have to pay that back, or have you already done that?
So we paid what we were reimbursed from FEMA for the water was like 70-some thousand. That was paid on this loan.
Okay.
So there's, like a $30,000 balance.
Okay. And that's just in the Fund 29 or?
So the loan is actually under the water
That's right.
because it's a DEQ loan.
Yeah.
So it actually is under the water because it's for the water.
Okay. So do we still have that? And it's sitting there waiting for other water?
No, because we did move it to Fund 29 to pay, to use it to help.
Okay.
Once we were reimbursed from FEMA, we moved that money to Fund 29, but then moved the 70-some thousand that went to the water, to the water department to pay from the water department on this loan.
Gotcha. And DEQ doesn't care that it came in at 79 instead of
Well, we-
112?
No,
And
because
then-
that's all we were reimbursed for.
Are we gonna get the rest?
I hope so.
And we applied for the whole thing?
Yes,
And they only
yes,
paid a piece of it.
right,
Oh, okay. So we applied for 112.
right.
They only repaid us 79.
Why is that?
So I don't know if it was separated between, I've not done any of the FEMA projects or anything. That's probably more of a Savannah question on where that money.
Yeah, because there was expense in the general fund under Public Works for that as well. Somewhere in here, I saw.
There might have been, I don't.
Yeah, so maybe that's where. Okay.
But yes, it hopefully, we're gonna get reimbursed for it from FEMA and then we'll pay off the rest of the loan.
Just out of curiosity, how long did it take to get that 70-some thousand? From the time that you applied for it?
I don't know.
Months?
Like I said, I've not done any of the projects, so I don't know when the project was actually sent.
Okay.
I know they've all been put in front of FEMA, but they have different stages on where they have to go, and so I don't know when it moved through those stages.
Is Savannah tracking that?
I think she can look on the grants website and find out, or the FEMA grants website. Yeah, she does.
Good, okay.
Yeah, she does watch it.
Somebody is watching.
Yeah.
Okay.
And finally, on page 54 of the audit, I know absolutely nothing about pension liability and covered payroll, but there's a footnote that says the town of Montreat has no assets accumulated in a trust that meets the criteria in paragraph 4 of GASB Statement 73. Is that a problem for us?
It's not. So what it is, generally the LEOSA, the Law Enforcement Officers Special Separation Allowance, is on a pay-as-you-go basis, and I think that's the way it's worded in the notes to the financial statements. And so, Melissa, you can back this up, but I think 100% of the audits that we have, they do on a pay-as-you-go basis. So no, it's just if that's the way you're paying through those, then this statement is required.
Okay.
In terms of funds, that's restricted funds, correct or not? If it's
Those,
it's a liability.
Should be.
Should be.
it is a liability, yes. But Melissa, I don't think those are considered
We don't set up a
restricted.
sinking fund or anything like that.
Yeah, I think that's what she's saying. This is basically disclosing that as a note. But what we're hearing is nobody does it. So, yeah, it's disclosing.
Because I think, let's see if I can find it in the notes real quick. Okay, here we go. So it says the town has chosen to fund the special separation allowance on a pay-as-you-go basis. And so 100% of the local governments that at least we audit, I haven't seen any audits where they actually have. So here it says the separation allowance has no assets accumulated in a trust. So it's also included here in the notes.
Gotcha. And that's because we do it on a pay-as-you-go basis.
That's
We don't-
correct. So you have the option to establish a trust and put those funds in the trust, or you can pay as you go as the liability comes due, then you just make those payments.
Gotcha.
Rather than tying up money that you could
Yeah.
potentially need for something else.
Yeah.
You don't want to spend a lot of pension money.
Well, I mean, we're not, but.
And one last question, on page 33, there's $15,860 invested in the North Carolina Capital Management Trust government portfolio. Is that just a savings account for us? Right there.
Yeah,
It is, yes.
we have two, one for the general and one for the water
And
department.
this is unrestricted, so
Yeah, what?
I mean, why isn't it just in the unassigned?
Because it earns interest.
It's,
Yeah, it's interest bearing and it's higher than what you get on a regular.
It's not very much money either.
No, it's not.
No.
is money just swept into it, or?
So since I've been here, I don't know how long that money has been in there, but we've not put any money in there.
Okay.
So that's something that Savannah and I think need to work on, is money that we do have that's
There's ought to be
not,
some sort of sweep feature though.
we need to, yeah.
Okay.
And it's just listed separately because the North Carolina Capital Management Trust is considered an investment, so it's not considered a cash equivalent for purposes of this disclosure.
Thank you.
Any other questions?
Are we all good? All right. Vote, thank you so much.
Oh, are we at the end?
We're at the end of the audit.
I had one question. Compared to the budget, the number was like, we came out $740,000 or $750,000 better than the budget? That was kind of a shocking number.
Yes, so let me pull,
I'm happy to hear it, but
where am I?
That probably has a lot to do with the cash flow loans and the,
Let's see.
I mean, we didn't get
it was, a-
750,000.
it was a number you gave us earlier.
Yes, so here. So
Can you
here's
increase the
the,
size of the tenant for us old folks?
sorry.
Thanks.
What did you say, John?
So on the revenue side of things, the final budget, so there was a negative variance on the budget, but your positive variance happened on the expense side of things. And so your positive variance of about 1,300 on expenses, but then your fund balance, so here's your others, and so here's 724.
Okay. So,
Expenses were a lot less.
Expenses were a lot less.
So
A
is
whole
that
lot.
because we classified, I mean, obviously our expenses were much higher last year because of Helene.
Yeah.
But the budgetary expenses were not, I guess.
They were classified elsewhere.
Yeah, and Helene.
Yeah, for Helene. So specifically, so a lot of the Fund 29. So this line item here, this is probably the one where you can see the biggest results. Your budget, it's budgeted in this number, but then it gets moved out into Helene. So it's still sitting here. So it's still accounted for budgetary purposes here, but then it gives, that's really what's driving a lot of that positive variance.
okay, so it's more numbers. It's not we're not necessarily better or really better off.
No.
Okay, thanks.
I've got one question, and I'm sure there's an easy answer to it, but on figure 3 on page, I believe it was 10, under transportation, under expenses, transportation, we had a number of 1,580,881 for this past year, and a prior year of 567,277. That was over $1 million increase in transportation expenses.
Yeah, I think
Yep.
that's what she's showing right there,
Yep.
is Fund 29 got moved in there.
Oh, I see, okay.
Yeah, there's about 800, one of the expense line items, I think it's called professional services on the trial balance, was about
Yes.
$900,000.
Yep. And that was the removal
Of transportation.
of all the debris, everything, all the recovery.
And that's what we call it, we just put it in the transportation.
I think they have to for
Okay,
GAP or,
gotcha.
So practically speaking, if some resident comes to us and says, how did we do versus a previous year, what do we say?
Well,
I mean, we did good. I think we did good.
Right? What's the reason?
So I think this schedule here and some of the MD&A, I think the MD&A does a better job of presenting, it presents comparative numbers. So if you're looking just at this information, and this is for government wide, so it breaks down your governmental activities and your business type activities. So if you're looking at it, your total revenues went from 2.7 million to 3.1 million. Your expenses also increased quite a bit. So from the standpoint, if you're looking at it, yeah, you have more revenues, you had more expenses, but those are Helene related expenses. So you don't expect to spend, I'm assuming you don't expect to spend $900,000 on cleanup in fiscal year 26.
Correct.
And so I think you can't, if someone says, how is 25 compared to 24? I'm like, well, those aren't comparable years because
Yeah.
you've got the hurricane in there. And I don't think those are even, I don't think that's a valid question for someone to look at. Because if you're looking at it from an increase in net position, in 2024, your increase in net position was 424,000. In 25, it was a decrease of almost 200,000. But we know why. Yeah. So I think comparing 25 fiscal year to anything is just, it's not a fair assessment.
Yeah, at the very least, we can say we treaded water and probably a little bit better.
a little better than treaded water. Our fund balance is better.
Yeah.
Than a year ago.
Our fund balance is better, so at the end of the day, we got more cash in our pockets.
That's right. And it's great. Not spending money we don't have. And that's, wish we could.
Yes, because I think if you, let's see, I'm trying to find the general fund. So, when you're looking at it from a general fund standpoint, so that really is what's your basic operations, that takes, throw out everything that's not included there. So from your basic operations, just from the general fund, your fund balance increased $725,000 nearly in the general fund. So that, get rid of Helene. So here's that $900,000 number that I threw out a minute ago. So on your general fund, if someone wants to say, what did 25 look like? Here's the general fund. Look at that, because then you're not isolating, you're not commingling those Helene expenses in with the general fund.
What schedule is that, Livonia, please?
It's on page 17 of the financials. It's Exhibit 4.
Thank you.
So we're going into the new year strong,
We are.
considering what we've been through.
Exactly.
Yeah, our only problem is FEMA's not giving us any money.
Right now.
I think everybody lost a lot of feathers because of Helene, but we're all we're going in a little bit better state now.
Right.
Well, we heard, I think I heard from the Black Mountain Town manager, that FEMA was supposed to give us, we've got projects of about $10 million under, individually, they're under $1 million. We're not supposed to have to spend money to repair that before we get the $1 million. So I don't know where that is, or even if that's true. But they haven't given.
That's what I've heard too, that there's a threshold of about $1 million plus, like $1,030,000 or something, It's under that and below is minor, and we're not supposed to have to come out of pocket.
Yeah, but we haven't gotten any. Do you know
Yeah, we
that?
have.
Have we?
Well,
We've got a couple minor ones. I think one of the bridge
yeah,
ones.
we have not, because the idea on that is cash flow. But, where they pay you in advance.
Yeah.
But their timing has been so far off that we've already done some of those projects. But, that's why things have slowed down, because now we don't, well, maybe we do have the cash to do those.
I would say, I would hate to spend $1 million and depend on FEMA to send it to us in the
Yeah.
next
Right.
60 days.
Yeah,
But that's why I think we ought to do what we need to do to ask them to send us money project by project by project. That's what it takes.
Well, that's what they're doing. That's what Savannah's doing. It's set up like that.
For example, we just got approval of obligated projects on Texas Road Bridge and the other pedestrian bridge.
Sorry.
On Great Deer.
Should we let Livonia go?
Yeah.
Sure.
Because this doesn't.
Thank you so much.
Okay, well, thanks, y'all. We really appreciate you having us.
Thank you.
Love
Y'all have a great afternoon.
gals.
Yeah, that's great.
I actually painted that. My daughter and I painted those in a little sip and paint thing they had at one of the local breweries here in Mills River.
Oh, cool.
Well, it looks like it was more painting than sipping, though.
Initially, it was. You're correct.
Okay, thanks so much.
All right. Thank
Bye-bye.
you. Bye.
Bye-bye.
In terms of the audit, this lady needs a
Yeah.
big thank you.
As I blush, turn 10 shades of red, but thank you. I appreciate it.
Yeah, good job.
Well, you can summarize it in 3 or 4 statements. You can say, one, the audit reflects, it's unqualified or.
Unmodified.
That's the word they use, unmodified, which means it fairly represents the town of Montreat's financial position. And the findings were not material deficiencies, even though we had 3 of them. But they've all been corrected, and
I thought that letter was well written too.
Thank you. I appreciate it.
Yeah,
I read
I
it.
could understand it.
I guess my schooling is paying off a little bit anyways,
But
right?
I get it. Let me say this, and I got this information from Rachel before I walked in here. The audit this year was more thorough than the audit we had last year. It was a different kind of audit. And the reason it was different was because of federal funding. The audit this year was required by the state and federal government. I mean, the kind of audit that we had. Now, don't ask me to name what we had last year versus what we had this year, but
All right.
it was more thorough.
It was,
this year.
yes.
They just had more stuff they were asking,
Yeah,
more numbers.
yes, and they actually verified like
Yeah, a lot of verification.
more things, like, hence how the internal controls of the pre-audit certificate. That's because they've never had to look who pre-audited it before in the previous audits. They just had to, kind of look, okay, it's been done, but didn't verify who, was signing those.
Wait, what are you talking about right now?
Well,
CPAs, or are you talking about FEMA?
The CPA, the auditors, yeah.
Everything falls on her desk. But what I didn't know is every check that comes to the town of Montreat has to be signed by Rachel. Every check.
Yeah, that's a new requirement.
That's a new
It's
requirement.
actually not a new requirement, I just didn't know. It's actually been that way forever, and when Angie told me, Darlene never signed a check. And so I said, was Alex a deputy finance officer? And
The answer's no.
we couldn't find anything that he was, but he was signing the check, so I was like, we need to fix this. So that's why I wanted, somebody to be a deputy finance officer, because I wasn't trying to take control of that. it just is a requirement. It's a state requirement. And so I was like, oh, because it says if they're not signed by the finance officer, they're void, they're not valid. And I was like,
At the bank, really?
So
how many years has this been, you know? So it was kind of in like a oh no moment. That's why we made,
you might want to
The
consider,
change.
the commission might want to consider Barry, because Barry's here. You know, he's,
Well, we've already assigned Angie, haven't we?
no,
no, Angie's
She is.
been mentioned, but she's not authorized.
she was assigned as
Yeah, we
the,
did. We did assign her.
as the tax collector, not as the deputy finance
All
officer.
right, we assigned you to be something too that you hadn't been. We took two actions. No?
No, I was the tax collector, and we also found out that I cannot be the the tax collector. So that's why you guys appointed Angie as the tax collector. But a deputy finance officer was no, because, you know, Savannah had been signing all the checks. And so I said it would make sense, so Savannah still has that, to make her the deputy finance officer, and you guys voted that down, so there is no
That's what
deputy finance officer, I am the only
I didn't
one.
understand that. That's the reason I threw Barry's name out. If Angie wasn't the right person,
All voting that down.
I don't either, I've been to the meetings.
But in any event, we just need to go through the control procedures and just make sure.
Yeah, I mean, it is, right, and so we fixed that, I sign all the checks,
Did they look at the control procedures,
yes,
I mean,
Is there a second signature or just one?
there's two, there has to be, two.
Good.
And so I sign it, the mayor, Kitty,
Barry.
Barry is a signature,
Savannah.
Savannah's a signature, and
It is.
Savannah approves the requisition, right?
she approves the requisition in the system.
Right.
Then when Angie prints it out, because of this whole internal controls and the pre-audit, I also have to sign the purchase order. So I sign the purchase order and then I send the checks.
She has to confirm.
So we have the money.
Yeah,
Yeah.
And that's what got us into
right.
lawsuit.
And I know, you know, when Fran said that during the commission meeting, and I saw the mayor look at me and I was like, I'm pre-auditing everything I'm given. So, but I didn't realize, and neither did Angie nor Savannah, because this has been in place since Stackhouse was here. So when he left, this is how he showed Angie how to do it,
And Angie's been doing it,
and Angie's been doing it.
but she's not a deputy finance officer.
Exactly, because in title only, she can't do it because she doesn't have that title.
We need to fix that.
Yeah, I mean, it doesn't hurt to add somebody. I mean, I'm doing it, we've fixed it now.
What do you mean?
With what we
She's
have.
still, even,
Add somebody as a deputy finance officer. Because if I am on vacation and say Angie has to get a check out, it can't go out until I'm back. So, I mean, and Savannah
Because you
and
have to be one of those signatories.
I have to be one of
And
those
then one of those others, her.
right, or a deputy finance officer.
Right.
Okay, then we need a deputy.
now, if you have a deputy, would that do it as well?
Yeah, so a deputy finance officer, yes.
Could do it.
They could sign the
Probably
checks.
is the best.
And they could actually sign the purchase orders as well as the deputy finance officer.
Okay.
So we, the council, shot down that suggestion?
Yes.
I don't remember it either, I might miss it. And I've been at the meetings too, but not your private meetings.
We need to talk about that.
But I think it was
The
because,
checks and balances thing?
well,
I mean, I remember appointing you in that discussion, but I don't have any.
But you can't be this deputy.
no, because I'm the finance
But we
officer.
appointed you as the finance officer, which you had not been before, right?
I've always been the
Yeah, she's
finance
been the finance
officer
officer the last couple of
since I
years.
started.
The only one. She's the only finance.
So can we add to the agenda tomorrow to appoint Barry or whoever?
Yeah.
Yeah, because what was recommended to y'all was to appoint
Savannah as the deputy finance officer.
You couldn't do that.
Well, couldn't, I mean, I understand your point, couldn't, shouldn't, because she would have control of all of it.
And I think that would be a problem with
And that's
Carter
probably why
too.
we're.
Right.
Yeah.
We just are too lean staffed.
Right.
Yeah,
Right.
but I think Barry is probably a good one.
Well, you could depend on him being here.
Yeah,
And he also probably knows what some of these, more about what these checks are being written for.
Yeah,
than-
'cause he's got the-
Than Angie does.
Right,
do this budgets.
yeah,
So we would appoint Barry as what?
the deputy finance officer. I don't know that he'll want it, but
He
I
probably
think,
won't.
I mean, you know, I think he's a good person for it,
That means he's got to, work in the office, huh?
yeah,
Well, it would only be when you're out, right?
yes,
Yeah.
yeah, so it would be,
And
Yeah.
we have to,
Swing by around 2 o'clock.
right,
yeah. I mean, I only live 3 minutes away, so it's not like,
Is that true?
it's true,
Okay. Has that always been the case?
yes,
Okay.
yes,
3 minutes away.
yeah. From my driveway to this,
Here, 3 minutes?
3 minutes, yep,
Yeah.
yep.
All right. The next item on the agenda is discuss the bylaws. And I can tell you by reading, it's the first time I've read the bylaws, by the way. And I
First
know
time I've seen them.
We are not in compliance with the bylaws.
No.
do we need to, have we had a motion to recommend that the board approve the audited financial statements?
We have.
Yes. Is there a motion that we recommend to the commission that they approve?
Right.
Right.
The audited financial statements?
Right.
Do I hear that?
I'll make that motion.
All right, it's been moved. Is there a
Second.
For tomorrow night.
All in favor?
Yes.
Thank you, Tom.
Who's taking notes here? Anybody?
Is what?
We're recording it.
Huh?
Oh,
Also recording it.
it's recording, yeah.
And I understand I'll be making that motion tomorrow, or I'll be making that recommendation.
Yeah, you're
tomorrow.
last on the agenda.
I'm last on the. Okay.
Philip moved and Tom approved. Seconded.
Who will be writing up the minutes of this whole meeting?
It's recorded, so Angie will do it,
She'll
yeah.
listen to an hour and a.
Well, she did.
She has software now,
That's how she got the minutes for the last meeting. It's recorded.
yeah.
Hey, I'll do it for us.
It's part of that email that you.
We don't support AI in this town hall.
If you
What's
had
that?
clicked on that link,
So it's-
you would have gotten the
Yeah.
We
video.
don't.
So it's a
Last meeting.
different kind of software that she uses?
Yeah,
Algorithmic processing.
Wow,
Oh, Tom,
new day.
let's start with you on this, on the bylaws. What are we gonna do about this?
Well, I looked at them and there are 6 different things that we are not in compliance on. One is our chair and vice chair cannot be residents. They have to be on the Board of Commissioners. Secondly,
That's
Really?
that's,
because-
I guess according to the bylaws.
the second thing that's in the bylaws is that we meet 3 times per year. 2 meetings with the auditors, one of those being before the commencement of the audit field work, and the second one, the one we just did now. A third meeting, annual meeting between this committee and town management. And then another one that we're not in compliance on is reviewing and overseeing the annual audit process and ensuring that all required financial information is made available to the auditors. Another one is.
Now, wait a minute, why are we not in compliance there?
Well, we're not looking over our shoulders.
We're not involved, we're not down here. The audit committee is not, it's Rachel, it's not us.
And I'm
And
not,
she's a
So read the requirement again,
The requirement is, and let me tell you that these bylaws were passed in 2011 and haven't been changed since.
from somebody else.
The committee, you wanted me to read the.
Yeah.
The committee shall review and oversee the annual audit process and ensure that all required financial information is made available to the auditors.
That's an impossibility.
That's a staff function.
Yeah, it is a staff function. It's actually a.
The next one that we're not in compliance with is The committee shall make a written report to the Board of Commissioners recommending acceptance of the annual audit. Now, I guess you could say that our minutes would be that written report, and stating how it has discharged its duties.
But written report's just wrong. What we do is pass a motion and.
Yeah. Another one that we're not in compliance with is evaluating the performance of the auditor annually following the completion of the audit process. And the last one that we're not in compliance with is that we should monitor the town's financial policies and procedures on an ongoing basis and recommend any necessary changes. So
Neither of those two really is we can't evaluate the performance of independent auditors in any meaningful way.
But we had an auditor for years, I think, too many years, that we should have reviewed them.
Yes, we should.
We had them for too long.
And there are a number of people on this committee, Philip is one, I'm one, and Bill Gilliland was, on this committee for a long time, and he knows we had some pretty poor auditors. And I know that when we contracted with Carter, we were elated, with the work that they were doing versus the cooperation we got from some of the old firms. I can remember two that we had that we just didn't use again.
The bylaws don't say anything about every 5 years. Maybe we should look at
not
the CPA.
I think it
not
was
the
a
current
3-year
bylaws.
thing.
Now,
This being the current bylaws.
these being the current bylaws. So, we are out of compliance.
All the way around.
Yeah, two things. We could change the bylaws to make them current. I think they were probably written during a period of time in which there may have been some question.
We had a different form of government then too.
We did.
Yeah.
We did.
I suggest we rewrite them. I suggest you rewrite them.
We can start over, we can do away with the audit committee.
Which is the second option.
And start over.
Why would
The
you-
commission would start over
Why would you
do
do
that?
away with
with new
it?
bylaws and
Well, I don't think we need to, if we decide that there's value in the audit committee, and I believe there is, then we can, as a committee, sit down and rewrite these bylaws, vote out on them ourselves, and then submit them
to the commission.
the commission for their approval.
Do we need to somehow, how do we overlook what's this, we're totally out of compliance.
Well, that's why we're going to rewrite them, because we are out of compliance.
It's done. What's water's over the dam. So it's just that we're sorry we didn't realize it. Here's the fix.
But that's the truth. I don't think anybody on this audit committee's even read these.
No, I hadn't until.
I've never seen them.
This morning.
Yeah. But then the audit committees before us have it either.
But the audit committee is committee's
How
functional.
long have you two been on the audit committee? Do you remember?
10 years, maybe. You longer than me.
Yeah, about that, yeah. And I think my time was over like a year ago, so that needs to be in the bylaws too. Be sure that it's in there about how long you served.
It did say that you could be reappointed
Okay.
by the commission.
But I
Yeah.
don't think this last time,
I think we're behind on you.
she used to contact me and say,
Oh, I got you,
do
yeah.
you want to up?
I think given the size of our community, we could maybe make that more than 2 years. For before reappointment, maybe 4 years and then
Yeah, if a person needs to resign, they
they can always resign, but.
We can't lose you, Philip.
Well, it's not our decision, it's the commission's decision, so Tom, you want to deal with that?
Sure. Maybe the four of us can get together and talk through it.
You're talking
It have
about,
to be a public meeting if 3 of us get together.
You're right on that. Let me just look up audit committee here.
We can just circulate it through.
Let's see. your term expires,
December.
no, last year.
I noticed that. We're illegitimate.
Everybody's gonna forget about it.
He expired last year too. We're the only, we have no expire.
No voting rights.
Now, the thing is that there is no limit on how long you can serve. It's just that there are 2-year terms, so we can.
How many people are on the Zoom? Is the Zoom off?
Josh?
What?
How many
Zoom
people?
is not off.
Is
there
anybody on
anybody
there?
on?
Is
Any
anybody on?
public watching?
Nope.
Okay, good.
Don't say that on camera.
Say whatever you want to. They're not joining into this one until we get in here.
Oh, gosh. But it is being recorded, isn't it? Can the public come in and see it?
Absolutely.
Yeah.
Who knows the stipulations surrounding what is and is not
I'm not gonna say-
information? General statute, are we under here?
We're gonna come clean on the fact that we've
Oh,
been
yeah.
out of compliance.
Yeah, right. Trying to do the right thing.
Right,
Yeah.
right. Well, I'll talk to Savannah and we'll figure out how to.
Yours
Have a
expired
seat.
a year ago. January.
Well, we're dealing,
It's sort of like King Uzziah, finding the scrolls in the walls of the temple. We just come up with these bylaws and we're shocked by them and we need to rewrite them.
Mason, we lost the scrolls with Helene.
I think an audit committee, there are not a lot of towns that have an audit committee
Yeah,
like this.
it's not
and it's
one of the
required.
things-
it is not required by the state.
That's right.
But like the complete audit that we spend money and your time on, and what you said, that it's important, I think, to the community. The audit committee is important to the community, even though they probably have a.
Gives credibility for sure.
Yeah.
And we got a little out of sequence that you guys got a presentation of the CPA this year ahead of our audit committee meeting.
But that, yeah,
And that, I think that's one of the tough things too, is, you know, by the time that it's due, they're just getting us the draft or the proof, so it has to be quick like
I
that.
think we can change that though, can we not? And
Philip and I both know, because we serve on another audit committee as well, for public radio. They are slammed. Carter
It's hard to
has
get
ours.
any
Carter does theirs too.
Yeah.
auditors. I mean, a lot of municipalities are having an issue finding auditors to do their
I don't mean
stuff, so.
changing Carter.
No, but what I'm saying is,
Not
because of
changing.
that, they're so busy. There's just not as many, I think,
You were
and
talking
even
about
Fran
trying
had told
them
me to move faster.
Yeah, stuff.
Yeah.
Yeah, get the audit committee to at least look at it and
Well, if they know what our bylaws say, you would think they would conform to it.
And they may not know.
I don't think they do. We didn't know.
I didn't know. I mean,
They would do what we asked them to do, I'm sure.
Well,
The suggestion, maybe we shouldn't, if we're having a hard time finding auditors, was that you change every 3 years.
yeah, and that's, I mean, there are a lot of people having, and we don't have
do that
to.
because they are hard to find.
They are very hard to
it's,
find.
this, you and I just happened to be in a meeting with some accountants last month, and there's a nation, and I checked it. It's true, there's a nationwide shortage of accountants now.
Yeah.
Coming out of the schools.
Yeah.
It has put pressure on the whole.
And this is very specialized accounting.
and it's one thing to do corporate audits.
But to do-
It's an even bigger thing. You gotta know all this extra stuff to do
Yeah.
governmental. That is really more complicated.
Well, we
And a
have-
lot of CPAs just don't want the good of do the governmental stuff.
Yeah,
Our church couldn't find an auditor.
yeah. And there's no law we have to change. If we find an issue, obviously we need to change, but, I mean, they've been good.
They have
LGC
been,
doesn't
Yeah.
have a problem.
they're the
Now.
best since I've been around.
Yeah, oh. Since I've been around too. They're the only ones I know, so.
What was the other item you wanted?
that was it.
Okay.
Yeah, they're not making big bucks off of little little towns like us.
They probably like the fact that we do the unabridged version. Because it gives them a bit more revenue. If we didn't do the unabridged version, what does the state require of us?
The one just below that.
Which is what? I mean.
Yeah, I mean, you
The one
don't,
we have.
so you don't have the intro or the statistics section at all.
Yeah.
Do you remember what we're paying them, our auditors, right now? Per year?
It was,
Between 20 and 30.
yeah, I think it was, I want to say 29, but I think that's wrong.
That's cheap.
I think it
We're
might have
lucky.
been, I think it,
That is real cheap.
For them.
because I actually thought it was going to go up this year and they didn't go up.
Uh-huh.
No, so we were still within our, what was budgeted for it.
What the cheaper version, how much would that save?
I have no
Actually,
idea.
I think even if we go to the other version, it's not gonna save us any money.
No, I don't think so. No,
Because
because we're giving them all that extra information.
The introduction.
They just-
Yeah,
they just- they
and they're just cutting and pasting or compiling.
Print a
it
few
into-
more pages,
Mhm,
that's all.
Yeah.
well, is there anything else to come for the meeting?
Discuss bylaws, approve minutes. Okay.
Well, do I hear a motion to adjourn?
So moved.
Second.
Second.
All in favor?
Aye.
Thank you.
Thank you.
Now, Hugh, I got you down